Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly review. And I'm recording this late Friday morning here on May 6th. So believe it or not, the major indexes and most growth funds are actually about unchanged so far in the week, but that's because we cascaded into a low last Friday, found a little support earlier this week, and then of course Thursday yesterday was terrible, and today they're putting up a fight. So we'll see how it goes. We are starting to see a little bit of up down action after a big decline, which sometimes can be a sign that the buyers are stepping up. But the bottom line, big picture, is nothing's really changed. The major trends and the intermediate term trend of the major indexes, of growth funds, of the vast majority of individual stocks is pointed down. And just on a day-to-day basis, even on days when the market's up or finding some support, there's just far more blow-ups out there, especially among the former growth leaders. I'll show you some, the Shopifys and the Cloudflares. There's still far more blow-ups than we're seeing, gap ups or signs of support, okay? So it's really just a time to mostly sit on your hands. In Cabot Growth Investors Model Portfolio, we came into the week, 2/3 in cash or a little bit less than that. Now we're 3/4 in cash. And some of these days, 3/4 cash seems like not enough, but pretty defensive. Now, I will say, again, I'm not one to trumpet sunshine or just always, have hope. We're defensive. We've been sitting on our hands. I think we've averaged 60% cash since early December. And again, that's not to, we've still made some mistakes in that time and taken some hits, but we've been playing defense. But I have to say, the fact is, no matter what they say, I read Twitter and I have a lot of respect for a lot of people, but a lot of secondary indicators that usually flash at near lows of major downturns, like when the market's down 20 or 25%, are flashing now. Now, maybe the market doesn't respond to it. Maybe this is another, I don't want to say 2008, but maybe this is another major bear market that just goes on for months and months. It's possible, and you have to respect that fact. But I would just say it's important also to, if you are defensive, I wouldn't hold in hope, but if you're already defensive, just keep an open mind, keep your eyes open, because the market does like to fool the majority. And right now the majority is definitely worried, if not panicked, and there's some forced selling going on and rumors that funds are blowing up and stuff like that. So don't fight it, but just keep an open mind, see what happens with the market going forward, because it wouldn't surprise me if we do get towards some sort of low here and can at least get off our knees and take it from there. From now, though, obviously, we're remaining defensive and just trying to keep an eye open for some future leadership, all right? Now, let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Get on my line pen. And again, there's not really that much to say. I mean, you can dive into every, bar here and say, well, we rallied here and fell there. But at the end of the day, we're trending lower here. We're below all the moving averages. This is the Nasdaq Composite. And the Nasdaq has been hitting lower lows. Of course, growth stocks have been, the worst of the worst in terms of general areas of the market. I pulled it up last week. I'm not going to pull it up this week, but we are still seeing a new low, positive divergence. Today, as I record this, there's probably about 900 new lows on NASDAQ. Obviously a lot. Back here, there was 1,700. So probably going to get another positive divergence. Again, it's a secondary condition. It's not a signal per se, but, it is something that you kind of see near lows. So we'll see how it goes. Find a little support today. I don't know. We'll see how it goes. I mean, it's been 1,000-point range here in just the last couple of days for the NASDAQ. So we could go up a few hundred points and still kind of just be chopping around here and nothing really changes, okay? Some of the other indexes are a little bit better, but no big difference here. The S&P 500, again, kind of somewhat lower lows here, positive divergence on the new lows, but just well below the 50 and 25-day moving average. I'm not going to spend too much time on this here. Mid caps, you got that. Small caps, look at the IWM, new low this morning, below the moving averages. And the New York Composite, same sort of thing. Okay, so the trends are lower here. We'll see what happens. Growth funds, not really any different. This is QQQJ. They all kind of look the same now. We're all kind of, back, but, a few weeks ago, it was kind of like, small caps looked like this, but the S&P was up here and the NASDAQ was here. Now they're kind of all in gear on the downside, for better or worse. But, just well below the moving averages. ARC has been sort of in the news here, but just you can see it's stretched here. It's at 47, the 50-day line's at 60, but clearly in a downtrend. So we'll see what happens. And just going on individual stocks, here. Like today, you have a Cloudflare. It's kind of hard to see on this, but you had this initial destruction here during the first leg down into January, and it was trying to hold up here for a couple months, but then gapping down today. Now we're, call it 70% off the high. Shopify gap down on earnings this week. Again, trying to find some support, but now we're 78% off the high. So it's one of those things where just if this is your first experience with it, some of these things going over the rails, every time these things come in, you're going to hear people say, it's a bubble and the things, the stock's over. Well, Shopify originally broke out at $50. So from 50 to 1700, there was a lot of downturns within there that said, well, it's all over. But once the thing does get over and once you really do pierce 200-day lines and stuff, these things can go down 70, 80%. It's really not that unusual once these huge winners top out when you kind of get it. So just put it in the memory banks. But either way, we're still seeing it back to the present. We're still seeing a lot more blowups than not. Wayfair got hit on earnings this week. Again, trying to find some support. Bill.com. Same sort of thing. So either way, I wouldn't get too much in the wiggles. I'm not a, swing trader here like, oh, this might go up 10 points. Obviously it could. But obviously the bigger picture is these things have topped. And the next go round, they're not going to be leaders. Maybe one or two will be, but the vast majority won't. Okay. I still am seeing a few positives. I mentioned sentiment and all that. Let's see what happens. I mentioned defensive stocks last week, and I can't say they're underperforming because the market's doing so poorly. But, I am seeing it's a little bit of a change in character. And even as the market imploded this week, XLP got hit. It wasn't like this right here. You see the market the XLP going up straight up like that. It wasn't like that. We're kind of got hit. It hasn't really bounced yet. Yes, it's trying to hold the 50-day line and all that. But I'm sort of intrigued that we might be seeing a little bit of kind of a give up the ghost action, so to speak, where even they just come around for all the nooks and crannies. Here's the utility stocks, which had been a safe haven. And of course, kind of big dividend paying healthcare, XLV, that sort of thing. So again, it's secondary or tertiary, that sort of thing. But we'll see how it goes. I'm starting to see some money kind of a throw out the baby with the bathwater action, not just among growth stocks, but we're even seeing some of the defensive sectors get hit. Okay. In terms of, stocks out there, I actually am seeing a lot of decent setups, at least shorter term in the energy patch. The risk, of course, is like I just said, the selling is spreading. So are we either going to get a rotation and these growth stocks bounce and the commodity stocks get hit? I don't know. But just taking it for what it comes here. Again, you're not early, just kind of a disclaimer. This is the weekly chart of Devon Energy. It's already had a huge run. Of course, it had a few bad years before this, so you can factor that in. But again, you're starting to see this, every time it kind of dips to the 50-day line, not only does it bounce back, but it bounces back to new highs. And this time on big volume, you see after earnings, and they're paying a big dividend, and they're, going to be buying back a lot of shares. So not only does it hit the 50-day line and kind of hold, but it's hitting the 50-day line and rebounding really quick to new highs, usually on big volume. So, Devon looks pretty good. PXD, which is Pioneer Resources, they're paying like a $7 dividend or whatever. But same sort of thing, kind of a shakeout here below the 50-day line. We got shook out of it in top 10 because it wasn't among the strongest names in the group, but really just smoke up a chimney here, really nice, obviously back to new highs. In the natural gas space, which actually I'm pretty intrigued by, I really like this setup. Now, again, the stock just doubled, so it could easily pull back in here, especially with the market doing what it's doing. But this is EQT, which is actually the biggest natural gas producer in the country. And you're going to kind of see a couple things I like about some of these things. Number one, it wasn't like with Devon, it's been doing this, which is fine. Where, hold on, it's fine, but you're not in the first inning sort of thing. This one, yes, it recovered after this was the 2020 crash in here. Yes, it recovered, but you can see it really wasn't doing anything. It just kind of mostly sideways here for a year. But it broke out here in February, I think. And like I said, it's almost doubled. It's almost flagging here. I don't want to go there, but, sharp pullback, but holding the 25-day line. Wouldn't surprise me if we get another little pullback here, let the 50-day line catch up. But EQT is one that's probably going to be going on my watch list. Again, huge cash flow, share buybacks, yada, 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 things like that. But that looks pretty good. I mentioned Arch Coal last week. It's hard. It doesn't mean these things can't fail after these big runs, but when you get these sort of volume clues, this was on earnings. And again, I think they're paying an $8 dividend. I forget the exact number. But just a huge cash flow and all this stuff. It I don't want to say it clears the air like all of a sudden it's a whole new advance and it's going to go up 6 months from here, but it certainly puts a line in the sand. I mean, clearly a lot of people were buying it on these 2 days here, and you'd think that short term, if we got a pullback, which is possible, there might be some people in there that says, well, I'll take a few more shares of that. This is Archcoal ARCH. So this one is interesting. I mentioned it in Growth Investor last night. Again, with all this stuff, I would tend to be buying these on dips, not on, if it's doing this, I probably wouldn't be chasing it higher with any meaningful position. But, dips or shakeouts, rotation, down days for commodity prices would be interesting. Halliburton's another one. This one is on my watch list. Kind of like EQT a little bit. Yes, it had this post-crash recovery, but it really didn't do much for 9 months or a year, whatever it was. And it has broken out. It did have a nice 3-4 month run here, and it got a shakeout here on earnings. Again, to me, this looks like it needs some time, but it also, I'd be surprised if this is a top. I mean, never say never with commodity stocks, but it kind of just got going. Earnings estimates are huge. And the earnings turnaround just started a couple quarters ago. It's not like it's been running for 2 years. So we'll see. It wouldn't surprise me if we get another shake and then start to resume here. But I think Halliburton is still intact. It's kind of in a little bit of a correction here, but my guess is the long-term trend is still intact here. Nutrien, just kind of mentioning some of these names that are hanging around. Sort of similar thing to EQT. It had a bigger run, but kind of had this huge post-war run, sloppy in here. And when it attacks the 50-day line that sharply after a big run, it's usually not just up and away from there. And you can see it's been choppy in here, but so far it's pretty much holding the 50-day line. Obviously the numbers are gigantic. So we'll see what happens. But a couple of weeks in here or a little bit of a correction in commodity stocks wouldn't be the worst thing for some of these. They cool off a little bit. Some of the hot money comes out of there, and then maybe they set up for a more sustained run. Star Bulk, this one's been one of these that's been, I've mentioned this before, and it's kind of like, hey, this looks okay here, and then you're like, no, it doesn't look good, and then no, it doesn't look good. Well, now it looks good, no. But net, you kind of back out here. I was just kind of flipping through a weekly screen before I did this video, and you just kind of had this again, this nice run, post-vaccine run, base, breakout for a couple weeks, and now sideways. I would say some other shipping stocks have been not good, so that's a factor in there. But this is setting up well. It doesn't have an earnings date yet, but my guess is, I don't know, when was it last year? May 19th, so that was last year's May 19th. So probably in a couple of weeks, you're going to get earnings, you're going to get the dividend announcement, and it's certainly been supporting in here around $26. So kind of interesting in here. It's a little bit thinner, moves around, but Star Bulk, SBLK, I kind of like that setup. And then on the, this is a little bit smaller. So this is more of a U.S. focused one. This is Next Tier Oil Solutions, just a turnaround play, basically oil services, kind of like Halliburton, but just focused here in the U.S. Much smaller, of course, much smaller, small cap, $3 billion market cap. But earnings of, a couple quarters ago was like, well, then maybe they'll make money this year. Now it's like they're going to make a ton of money this year, relatively speaking. It has had a big run here. It's low price stock. It's had this persistent uptrend. But so far, it's been pretty much respecting the 25 and 50-day moving averages. So whether you want to nibble and put a stop there and just see how it goes, it's up to you. Earnings are out of the way. Numbers were good. But NEX is one to kind of keep an eye on. And then just sort of, this isn't really commodity, but it's not growth, sort of defense. This is West Rock. It was in top 10 a couple weeks ago. Just a paper company, basically. And you can see it's had this long correction. But some of our screens pick up on these things that sort of bottom out here. You can see the relative performance line is picked up. And then the stock itself, we can get the week, stock itself started to pick up here back above the 200-day line. And now here this week they reported earnings. It's cheap. It pays a dividend. It's not really exciting or whatever, but that's what is working in this market. If it's not commodities, it's sort of defense. Things are working. So nice pop here. If you're interested, see if there's a pullback and that sort of thing. Okay. On the growth side of thing, it's slim pickings, but here's what we're looking at. Lantheus, I mentioned this is imaging agent. Now it's had a big run, started with this huge 10 times the volume gap, and it's really acted well. It just hit the 10-week line here and found support before and after earnings. You can see the little gap here. again, holding firm. Earnings estimates keep going up. I think they were supposed to make $2 this year. Now they say 3. Maybe it will be 4. Who knows? So the stock looks pretty good. Again, maybe it pulls back, fills the gap or whatever, but LNTH looks good. Halozyme has earnings next week, so we'll see what happens. It has pulled back 5 points or whatever, and you can't really say, my rub with this one at this point, it's on my watch list, but is that it had this decline and bottomed out, and it ticked up here, but I wouldn't say it really established a new uptrend. But I still think this is a pretty good setup heading into earnings. Not that I'd be buying it. Hit the 50-day line here. Let's see what happens. If you get a positive reaction, maybe you're cooking with gas there. We'll see. I'm just going to mention a couple others. These are more on the higher low side. This is Dutch Brothers. We owned it, a small position, not small, but half-size position, got knocked out, so no fun. And then it's come in here. But again, you kind of have this kind of higher low action in here, finding a little support today. And just when I look at the weekly chart, a couple things, and I've seen this more and more lately. Look at the volume on the selling here in the last few weeks. Does that guarantee that it has earnings next week? Does that guarantee that there's no more sellers? No, of course not. The stock could get killed. Who knows? But there isn't that much selling. It just seems like it's being dragged down by the market more than, oh man, there's a ton of funds that are out there selling it. Okay. Now it's a recent new issue. There's not a ton of sponsorship yet. This is a great cookie cutter story. So we'll see what happens, but I am keeping a distant eye on it. And again, it's one of these things where a nice earnings move would at least give it a chance and say, hey, you know what, this could be a more normal consolidation as opposed to these things that are down 60%, and then you're all wild. You see how it's like every pullback's a little bit calmer. Let's see how it goes with Dutch Brothers earnings next. Let's see, May 11th, whatever that is. Okay. Same sort of thing. Sweet Green did report. This is SG. I'm sort of lumping these into these sort of new cookie cutter stories. This one is sloppier. It also is thinner and smaller in terms of market cap. Good sales growth, but no earnings yet. It's getting hit on earnings. I'm just mentioning it because it's kind of back down to this area here where it's found support. So if the stock turned around from here, you'd say maybe this could be a base. And it did tighten up here ahead of earnings. No help today, but just one I'm kind of keeping a distant eye on because it's a good story. Zoom Info I mentioned before. It's funny on a daily basis. It's all over the place. I don't know. It's hard to maybe see on this chart, but I mean, one day was 48 to 52. The next day was 48 to 54. Then it was 53 to 48. Now today, okay. So, but just again, this is kind of what we're dealing with at this point. First of all, it's kind of interesting. It's sort of finding, I don't want to say support because it got sold off after earnings, but it's unchanged on the week on higher volume. We'll see. And it's just trying to kind of hold these lows, a little bit of higher low in here. Again, with some of these things, what I'm trying to see is not that they look great here, but a couple of good days or a good week or two, all of a sudden you might say, well, this kind of looks like it's rounding out a little bit, so as opposed to some of these things that are just, dead in the water, trending lower. So anyway, ZI, it's actually on my watch list, but there's some of these things I'm trying to find higher lows for. And just near term, I just want to mention two names. I guess if you're a trader, you could play them. I'm sort of looking at it more for sentiment. One is Facebook. Stock looks terrible. Weekly. Actually, there's going to be three names here. One is Facebook. You can see stock looks terrible. Huge break on earnings 3 months ago. But just it did react well to earnings. I guess last week it was. You can see the volume support in here. And then again this week it's actually up, $6 on the week. No big deal. But it's hanging in there. You can see way above its prior low. If this can kind of hang in here, of course this is such a mega cap stock. If this can hang in here and kind of maybe extend higher next week, it could be, again, I'm just sort of looking for these small changes in character. We'll see. But it could just, be a little bit of a sign. AMD is another one, Advanced Micro. You can see reacted well to earnings a couple days ago this week. Got hit yesterday, but, still well above the low. Just looking for some of these, because any earnings winner we've seen so far has been sort of like this, and then it gaps up, and then, a couple days later, it's right back down. So if we can see a little bit of a change in character, maybe this extends back above the 50-day line. It's not buyable to me. I'm just looking at it in terms of institutional sentiment. It's a very liquid stock, that sort of thing. And then, of course, Square or Block, they reported earnings last night. Still has a little bit of this higher low thing going on, nothing big, but we'll see what happens. Again, if it can kind of hold on earnings here and extend higher, this is a big liquid sort of glamour stock. Can it be a little bit of a sign of a change in character? These are just like little breadcrumbs here, but back to the big picture. Back to the Nasdaq here. we'll just see what happens. I mean, I think let everyone else kind of debate it and argue it and tell them they're super bearish. When volatility is like this, there's all these predictions. Oh, it's a great bottom, super bearish. We're going to crash. This is 2008 again or whatever. We'll see what happens. But, there are some conditions in place that usually flash near lows. I know I keep saying that and it hasn't worked. And that's what happens with sometimes. These things don't always work, when you want them to. So, it's time to be defensive. But I would just keep an open mind. There's a lot of bad news here. You're seeing some forced selling. You are seeing some new low divergences out there. And just the fact that we've had this, the Nasdaq's just fallen 2,600 points here in the past month and change. So we could certainly bounce here and then kind of evaluate from there. But there's no question here that the overall trend is down. There are some rays of light, but until that changes, until we actually see other buyers step up, some of these big institutions, it's best just to mostly sit on your hands. If you want to take advantage of a couple of these commodity stocks, I think that's okay. But for the most part, sit on your hands and remain patient. Patience is a virtue in the market, and we'll just wait for the next sustained advance to begin. Okay, that's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly review.